So hello and welcome to another Lunch and Learn.
Your local enterprise office, helping your business respond.
You're very, very welcome to another Lunch and Learn. Hope you guys are well. Today we're going to meet the revenue commissioners. Oh my God, I never thought I'd say that, but it's true. We're going to meet them. On today's show, we have the amazing Dullea, Principal Officer, and we have Karen Byrne, who's hiding behind that camera there. Why are you hiding, Karen? Who's Assistant Principal at the Revenue. Now, Karen and Anne are going to talk about the employment. There's Karen. Are going to talk about the Employment Wage Subsidy Scheme, known as the EWSS, which comes into effect on September the 1st. So they're going to talk about what the EWSS is, how employers can avail of it, and more importantly, answer any questions or concerns that you have regarding the scheme itself. Still late to join us today, but we also have another special guest, touch wood, today, and that's Pat O'Shea. Now, Pat O'Shea is also from the Revenue. He's a principal officer there, and he's going to be talking about something, quite frankly, I'd never even heard of about before, called debt warehousing. So he's going to talk about what debt warehousing is, how SMEs can avail of it, and he's also going to mention about another initiative called interest suspension. I think it's interest suspension. Anyway, Pat will tell all a little bit later. Down the very bottom, looking very Hollywood star-esque, we have Michael Nevin. Now, Michael Nevin is the head of the local enterprise office in Longford. So the head of enterprise in Longford. And he's going to be talking about some local enterprise office supports at the end of the show. So guys, you're very, very welcome. Hello. Are we all excited? We're all excited. Brilliant. So what I'm going to do is I'm going to start things off with... I'm going to remove Michael. It's very rude of me, but you can come back at any moment there, Michael. I'm going to talk to Anne and Karen for a second here. And I know, Karen, you have some fantastic slides that you want to share with us in a moment. But my first question for you guys is, just to kick things off, what exactly is the Employment Wage Subsidy Scheme, or now the EWSS, as a lot of people refer to it?
And do you want to take that, or will I take that one for you? The Employment Subsidy Scheme is effectively, as it's a scheme that's available for employers. For those that haven't already availed of the Temporary Wage Subsidy Scheme, it is a new scheme that is starting on the 1st of September. It was announced by the Minister under the July stimulus package. Employers to avail of a flat rate subsidy per employee that they have employed, and depending on the gross weekly wage that they're paying their employers, details throughout the presentation. But effectively, the Employment Wage Subsidy Scheme will replace the Temporary Wage Subsidy Scheme from the 1st of September.
Okay, so as we go, you have a brilliant presentation, Karen, so we'll pull that up right now. If anyone has any questions regarding the scheme as we go through the session, drop them in the comments box, so we'd love to see them. So let's see whether we can see the slides there. So there's our first challenge there. So I am the virtual clicker today. So I'm literally going to be Karen's virtual clicker. So so Karen,
Thank you very much. So there we go. First slide is up. Okay, so just before I launch into this presentation, just to say thank you again to Greg and to Michael and to the LEO for having us here. It's great to be able to use these type of platforms to inform members about the subsidy schemes, being that the Temporary Wage Subsidy and the Employment Wage Subsidy Scheme that we have. Before I bring it into that EWSS, or the Employment Wage Subsidy, there are a few aspects of the Temporary Wage Subsidy Scheme that I would like to remind employers that have been availing of it. As we know, it's due to cease on the 31st of August. However, there are still some operational aspects that will continue on past that date, so it's important to remind employers of those. And just to give you some stats, as of the 6th of August last week, so a week ago, we hope to publish some stats again very soon. But there's 69,500 employers have registered for temporary wage subsidy, with 65,500 receiving payments, with over 647,000 employees availing of support under the temporary wage subsidy, paying out 2.432 million, and that includes tax refunds of 151 million. So I'd say it's quite extensive. They were last week's figures, so we hope to update, but it just gives you a sense of the enormity of the temporary wage subsidy scheme that has been applied throughout this pandemic. So moving on to the first slide there, please, Greg. So just I'm going to talk you through those aspects that I mentioned there. The compliance check programme, bit about the end of year review for the employee, and a little bit about the oncoming reconciliation for employers who have availed of the temporary wage subsidy scheme. So moving into the compliance check programme, so to ensure that the temporary wage subsidy was operated correctly, sorry Michael, next slide please, or Greg, next slide. The temporary wage subsidy, we have Revenues conducting a programme of compliance checks on all employers who have availed of the scheme at any stage, and not just those that are currently availing of it. And it's just involved letters issuing out to employers and their agents where relevant, mainly through the My Inquiries inbox. And revenue teams are working these cases in batches. So if employers haven't received these letters to date, do keep an eye on that My Inquiries inbox for the correspondence. And the compliance checks are essential just to ensure that employers have met that eligibility criteria as they indicated when they registered for the temporary wage subsidy scheme. And they may be asked for details of the business activities, if there was a date of closure, basically around the general terms that they suffered the negative impact as a result of the COVID-19, and that around that 25% turnover test. You may also be asked for some copies of some pay slips for employees as a sample check for those calculations that were used. But it's important that the compliance check is not part of an audit or intervention. It's merely just to provide assurance that the scheme has been operated as intended by the employers. It will also address any issues identified in respect of the operation of the real-time PMOD or the real-time PAYE by employers over the 2019 and 2020 period. And it's an opportunity for employers to address any other outstanding tax issues that they may have. And that will be of importance to employers who may wish to avail of the debt warehousing scheme that Pat, my colleague, will talk to you about shortly. So just in terms of to have your tax affairs up to date compliance will be a prerequisite in order to avail of that debt warehousing arrangement. We've received a very positive response to date on this compliance check programme. So it is just important that when employers do receive their letters, to respond within the turnaround time indicated on the letter, or even just to make contact with your caseworker, just advising them that you are working towards gathering that information as required. So the next slide, please, Greg. The end of year review for employees will be important in the coming months. You're probably aware that temporary wage subsidy payments are liable to income tax and USC, and those that were in receipt of the pandemic unemployment payment, or the PUP, that is also liable to income tax. And although those payments have not been taxed in real time through the normal PAYE system, they will be liable for tax and USC by way of an end of year review for the employee. When that review is carried out, and should an income tax liability arise, it's normal revenue practice to collect any tax outstanding or owing in manageable amounts. And that's done by reducing an individual's tax credits in future year or years in order to minimise any hardship. And in this case, so the reduction of tax credits will not occur until 2022 and may continue to 2026, depending on the circumstances of the employee. And when the temporary wage subsidy scheme was announced to continue to the end of August, Revenue placed all employees in receipt of temporary wage subsidy or PUP payments on a non-cumulative week one basis. And this again was to further minimise that potential liability at the end of the year. And also, if employees have any additional tax credits to claim in respect of the 2020 tax year, for example, those health expenses that we may all be familiar with, they can also be claimed against any liability owing. For those employees that were placed on that week one, if they continue on to the employment wage subsidy, the week one will continue to the end of the year. And employees who were not previously on the temporary wage subsidy joining the EWSS will be taxed as normal. And I'll talk to you about those arrangements in the EWSS slides in a moment. So moving on to the reconciliation phase, and I know a lot of employers are quite anxious to get some information around this reconciliation phase that is coming at us. It's currently in developing and moved into testing phase, and we will issue guidance as soon as we have it around the operational aspects on this reconciliation. But essentially, Revenue will reconcile each employer who operated the temporary wage subsidy on each active pay slip. As you might remember, back in March, a very long time ago for some of us, the employer refund scheme was launched prior to the temporary wage subsidy scheme, and Revenue were refunding maximum amounts of subsidy to employers, be that €203 or €410 to employers, regardless of the subsidy that was paid to the employee. So when we moved then into what we call the operational phase of the temporary wage subsidy scheme from the 4th of May, Revenue provided all the necessary information for that calculation of subsidy to be paid to employees, so they got the correct amount of subsidy. So because we had the transitional phase, we had the employer refund scheme, and then we moved into the operational phase, there is a requirement, or it gives rise to the requirement for a reconciliation on those balances between those phases. So as part of that reconciliation, the process, the employer will report a subsidy paid amount to Revenue, and that's the amount actually paid by the employer to the employee. The reconciliation would also calculate a subsidy payable amount, and that's the subsidy the employee is due based on the rules of the scheme as set out in Section 28 of the Emergency Measures in the Public Interest Act, and the subsequent determination of rates by the Minister of Finance on the 16th of April. So the calculation will look at the subsidy paid, the subsidy payable, and then a third category, what we're calling the caseworker resolved. And that's where a caseworker will manually resolve the case. So the calculation then will be either the wage subsidy repaid by Revenue less either the caseworker resolved amount, the subsidy paid amount as reported by the employer, or the subsidy payable as calculated as part of the reconciliation process. And there will be options for the employer to report that information either through what you're probably familiar with as a CSV file upload that's available in ROS, or through Revenue payroll reporting in ROS, and that is available now. The CSV option is probably the best for employers with large numbers of employees, and that is expected to be available from the 5th of September. So keep an eye on that. And again, an instruction manual will issue to employers around the operation of this reconciliation phase. So once the employer reports that subsidy paid information, they'll be able to request a reconciliation, and that will trigger the reconciliation process, and it will move through our systems here in Revenue, and a CSV file will then be available for download, and a message will be sent through that ROS inbox advising the employer or the agent that the new reconciliation CSV file is available for download, and a statement of account will also be sent to that ROS inbox with the reconciliation totals. Before I move off this reconciliation slide and into the EWSS, just want to make a point of note that we had been requesting that for employers who wanted to make refunds of temporary wage subsidy payments back to Revenue during the course of the scheme, there were bank details and an EFT facility, but we were asking now employers that we have launched a new RevPay facility for this purpose, not to use the EFT facility anymore. So if employers want to make that repayment of TWSS payments back to Revenue, please use that RevPay facility and only include amounts of subsidies. Do not include payments in respect of income tax and USC, as those would be separately paid or repaid under the PAYE-EMP subhead. And again, there are instructions in our FAQ document on our website, and there is a dedicated RevPay web content on the website as well if you want to follow those instructions. So moving on then into the EWSS, the Employment Wage Subsidy Scheme, which is valid from the 1st of September to the 31st of March 2021. So as I said, the TWSS will expire on the 31st of August. Since the 31st of July, no new employer has been able to join the scheme, but those currently availing of it will continue until the 31st of August. And the wage subsidy scheme, the Employment Wage Subsidy Scheme, as announced by government, will effectively replace this TWSS from the 1st of September. There will be an element of both schemes that will run in parallel from the 1st of July until the temporary wage subsidy ceases at the end of August. So employers who were not eligible for temporary wage subsidy, or employees who had, or employers who had employees that were not eligible for TWSS, can claim EWSS in respect of those employees from the 1st of July. Now that will be dealt with as part of what we're calling a sweepback mechanism, which is currently under development, and the payment for those cases hopefully will be made in mid-September, I think by the 15th of September. The legislation itself was signed on the 1st of August for the EWSS, and we are currently developing guidance material which will set out in more detail that eligibility criteria and operating procedures for the scheme. We hope to have them very soon. And as I said, Q4, I might not have said actually the date for the reconciliation, but Q4 this year, so possibly around October, we'll see that calculation for the reconciliation phase to happen. But employers will be able to access that CSV file to upload the subsidy paid information from September. So claiming the EWSS, the employer will pay the employee their normal wages, and then revenue will pay the subsidy amount via an EFT directly to the employer in respect of each eligible employee following submission of the qualifying payroll returns. So moving on then into the key points around the EWSS, if I haven't mentioned them already, we're allowing that seasonal and new hires to be included and backdate to 1st of July, as I mentioned, and those payments again will be expected mid-September. Any payments for subsequent periods being made will be made monthly in arrears after that. And again, we will have guidance around that soon. I'll talk to you a little bit more about the eligibility on later slides. Publication, as with the TWSS, the list of employers participating in the EWSS will be published in January 2021 and again in April 2021 on our www.revenue.ie website. The registration for this, as with TWSS, will be through the Ross facility. I have a little bit more information on a later slide. The subsidy itself is based on a flat rate payment based on the employee gross weekly pay. And again, I'll give you those amounts in a later slide. The EWSS is operated through the normal payroll and taxation system. So employers will be required to operate payroll taxes in real time on those gross payments that are being made to employees. So I suppose that's a significant difference between the EWSS and the TWSS. And while employers are required to report and pay the full rate of employer and employee PRSI, on receipt of payroll submissions, revenue will then apply a reduced rate of the 0.5% PRSI in respect of employees for whom a subsidy is payable. So that being where their grossly weekly wage falls between 151.50 and 1462 per week. The employer monthly liabilities will then be revised accordingly, and any resulting PRSI credit will be available for offset against any future employer liabilities. As with anything, there are safeguards to minimise abuse of the system, and again I'll talk to you about those anti-avoidance provisions in the coming slides. Another element which I haven't got on that slide but I do have in later ones is that the employer must be tax clear in order to operate the employer's employment wage subsidy scheme. So next slide, please, Greg. So the employer eligibility. So to qualify, employers must be able to demonstrate to the satisfaction of revenue that their business has been significantly disrupted by the reason of COVID-19. So again, that was the same with the temporary wage subsidy. In this instance, the employer must demonstrate at least a 30% decline in either the turnover of the employer's business or in orders received during the period of 1 July 2020 to 31 December 2020 as compared to the same period in 2019. If we move on to the next slide, in cases where the business of the employer had not operated for the whole of the corresponding period in 2019, the following rules can apply. So where the business operations commenced on or before the 1st of November 2019, the 30% decline test must be determined in 2020 by reference to the same period in 2019 in which the business was in operation. Or where the business operations have commenced after the 1st of November 2019, the employer must be able to show that the turnover or orders during the 1 July to 31 December 2020 period will be at least 30% less than what the turnover or orders would have been had there been no disruption caused by COVID-19. On to the next slide there, please. So again, as I said, the employer must be tax clear in order to avail of the EWSS, and they must remain tax clear to continue receiving those EWSS benefits. In order to qualify for tax clearance, the employer must be compliant with all obligations under tax legislation in relation to the filing of tax returns and payment of taxes. So if you have filed all your tax returns, but you're not in a position to pay the liabilities and you have debts that can be warehoused under the COVID-19 debt warehousing scheme, then you can still obtain tax clearance if you enter into a phased payment arrangement. And I know my colleague Pat will talk you through that tax warehousing incentive. But where an employer files a payroll submission but is not in possession of an e-tax clearance, a warning will issue that e-tax clearance is not in place. So it is a mechanism that's built into the system, and it will provide adequate notice to the employer that they must regularize their position prior to the return date. So that would be the 14th of the following month to ensure that they receive payment of the subsidy. Employers are also required under the EWSS to review their eligibility criteria at the end of the month, at the end of each month, from August 2020 to February 2021. If as a result of this review it transpires that the employer no longer qualifies, then they should withdraw from the scheme with effect from the first day of the following month and cease claiming any subsidies for employees. So that review is basically to ensure that the projected turnover or order reduction of at least 30% for that July to December 2020 period remains valid and does not need any adjustment based on the actual trading results to date, together with any other developments that they may have in the business or in the marketplace that might impact that projected 6-month turnover. So it's not a monthly review, it's still based on that 6-month period of turnover. As such, employers can then re-register if a review during the following month shows that they can once again expect a 30% reduction for that July-December period. However, that registration won't be backdated to encompass the period where the 30% was not expected. Excuse me. So moving on to employee eligibility then, this is more of a shorter slide. So as mentioned, employee eligibility has been extended to seasonal workers and new hires for the EWSS. Childcare businesses registered in accordance with Section 58C of the Childcare Act 1991 are also included in the scheme. I haven't got that on the slide there, but they are included. Excuse me. Non-TWSS employers or non-eligible TWSS employees will be eligible from the 1st of July, as I said, through its a sweep-back mechanism. And yes, they will be. I have the date here now. They will pay the subsidy no later than the 15th of September. So in order for those cases to be included before the 5th of September, employers will be required to provide the employee information and the details, so such as the name, the PPSN, employment ID, payment frequency, using a template that will be made available on revenue.ie in the coming weeks. And then again, Revenue will upload that information and calculate the subsidy due to be paid and pay it into the designated bank account for the employer. There's also no restrictions on the EWSS under the TUPE arrangements as were with TWSS, provided that such recruitments or movements are undertaken for the bona fide purposes of the business and not with the intention to maximise any subsidy claims. There are some restrictions for certain categories, and we have had some queries around proprietary directors. So proprietary directors in certain is one of the certain categories. However, in recognition of the role that is played by certain proprietary directors in providing employment to others, so especially in that SME sector, it has been agreed that EWSS can be claimed in respect of certain proprietary directors, and we will have additional guidance around this. We are just awaiting some confirmation around this aspect of the scheme. So once we have that guidance, we will issue it as soon as it's available. Also, connected parties who are not on the payroll at any time between the 1st of July 2019 and 30th of June 2020 will not be or will be excluded from the scheme. So registration then, I'm conscious of the time, so I'll try and move quite quickly. I think we've covered the basis of the eligibility criteria, so some more important features of the oncoming EWSS. So the registration, as I said, will be through Ross. From the 18th of August, the employer, the agent or the payroll provider should be able to register for EWSS. But however, that application will only be processed if the employer is registered for PAYE PRSI as an employer, has a bank account linked to that registration, and has e-tax clearance, as I said earlier. Moving on to the subsidy rates then. So the payment of the rate is based on the employee weekly gross pay. So where that weekly gross pay is less than 151.50 per week, there is no subsidy payable. Where it's from 151.50 to 202.99, 151.50 is payable per week. Where the gross weekly pay is from 203 to 1462, the amount is 203 per week, and where it's more than 1462, there is no subsidy payable. So again, we can see those flat rate subsidy payments. And then finally, moving into safeguards and compliance. So the Act itself does have specific anti-avoidance provisions set out, which will seek to counteract any contrived situations where any gross pay due to an employee is either deferred, suspended, increased or decreased with a view to securing the wage subsidy, or in situations where an employee is laid off and removed from the payroll and replaced with 2 or more employees in relation for whom the subsidy would be available. So there's specific measures in place there. And if revenue identify any of these cases, the employer will be treated as having never been eligible for the scheme, and any subsidy payments received would need to be refunded together with possible interest and penalties. So as with the TWSS, the employer should retain all evidence and supporting documentation of their operation of the EWSS as compliance checks will be undertaken. And where they're undertaken, it will be on a percentage basis and will operate on either a random or risk basis. So that brings me to the end. We can move on to Q&A if there are any questions coming in. Greg, thank you very much everyone for listening. I hope it was informative enough for you at this point. As I said, we will have further guidance around the operational aspects of the scheme, and they will be published once we have them.
Superb. Thanks so much, Karen. My head hurts. I don't know about anyone else. My head definitely hurts. There was a question, and that's in a good way. And Ivan just asked this question. It makes sense. Will there be recording of this presentation later? Because I think this is probably a presentation you're going to need to rewatch or forward to your accountant, quite frankly. But I think that's important. So simple reality is the recording will stay on the Facebook page, so you guys can watch the recording as many times as you like. You'll also find a recording from today's session also on the local enterprise office YouTube channel. So just to give you a heads up, because I do think a lot of what you said, Karen, is brilliant, but I need to watch it again just to make sure I was 100% clear. Great news is there are some questions coming in. Now let me just have a look at some of them. One question that came in is, can I avail of the Employment Wage Subsidy Scheme if taking on new staff?
Yep. Do you want me to
I'll
take
the
that,
question,
Annie?
Greg, if that's okay.
Yep.
And just one thing in relation to the recording, it's just very important if people are listening to the recording a couple of weeks after it's made, guidelines will continually be updated. So this is the position as of today on the 13th of August, but there will be additional information available even in 2 weeks' time. So just if you are listening to it in the future, just be sure to go on to revenue.ie and access the more up-to-date guidance at that stage. The question was, if you have new employees, can you claim EWS in respect to them? You can claim EWS in respect of every employee from the 1st of September if you're an eligible employer. If you're an eligible employer and you're taking on new people who wouldn't have qualified for TWSS, then yes, EWSS in respect of them for July and August, and that will be covered by the sweepback that Karen spoke about during her presentation.
Okay, fantastic. So that's potentially some good news. Another question was, let's have a look here, see what's coming in. Question here was, can I backdate an EWSS claim?
Again, this is back to the sweepback. So if you have employees who weren't eligible for the Temporary Wage Subsidy Scheme, or if you as an employer wasn't eligible for the Temporary Wage Subsidy Scheme, but you are eligible for the Employment Wage Subsidy Scheme, you can claim that for July and August as part of the sweepback, which Karen spoke about. That won't be paid until September, and you don't have to worry about not being registered before now to be able to get it. It will go on as a separate process, with more information being provided before the end of August on how to claim in respect of July and August.
Okay, fantastic. Okay, brilliant. And then, as regards, I'm sure you covered it, but again, just people are still slightly confused. What do I have to, if I'm moving from the Temporary Wage Subsidy Scheme to the new Employment Wage Subsidy Scheme, what exactly do I have to do? Can I just do nothing, or what happens?
Okay, well, the registration process is a new registration process for the Employment Wage Subsidy Scheme because the eligibility criteria is different. It's looking at the half-2 results for 2020, whereas the Temporary Wage Subsidy Scheme was looking at quarter 2. So you do have to go through the whole registration process to be able to do the Employment Wage Subsidy Scheme. As Karen has said, you need to have tax clearance to be able to register for the Employment Wage Subsidy Scheme. So I would encourage everybody to start looking at your tax clearance situation now and apply for e-tax clearance if you don't have it already, just to make sure that you will qualify and have the registration in place before the first pay date for any wages you pay after the 1st of 2020. So that's all you have to do if you're transitioning, is just to be sure you're registered with effect from the first pay date after the 1st of September.
Okay, brilliant. And then another question was, will putting staff on the EWSS and then topping them up affect their tax and take-home pay?
Okay, this question has come up a few times. That one of the huge differences between the Temporary Wage Subsidy Scheme and the Employment Wage Subsidy Scheme is that the Temporary Wage Subsidy Scheme was a payment to employees through the employer. This is a subsidy back to the employer to help him meet the cost of the wages he's paying to the employee. So employee going back onto normal payroll, the normal payroll regulations and POD regulations are back in force with full tax tax USC and PRSI being calculated on the full wages that will be paid to your employees after the 1st of September. And you will then, as an employer, as an eligible employer, get a subsidy back. So top up is gone, and how much you're actually paying the employer itself. And that decision is taken in accordance with terms and conditions of the employment, and the EWSS doesn't impact on the amount of a top up or anything that you pay them.
Okay, and I mean, it's unsurprising, and I think that there's probably clarification required that's not there yet for this one, but this is coming up a lot. People talking about what is it? Proprietary directors. who work with no staff to run their business, can they,
Yeah.
what's the deal with them at the moment? I know we're still early days with the EWSS scheme, but
Okay, so yeah, as you would have seen in the legislation, proprietary directors were being excluded in full, and then just before it was signed into law, Department of Finance determined that they would let in proprietary directors, and the statement they made spoke about proprietary directors with ordinary employees. And we're engaging with finance at the moment to decide how that will work and what proprietary directors will be included and what they mean by ordinary employees. So we don't have a definitive position on that as of yet. And as soon as we do, it will be published on our website. The guidance will be published up there.
Okay, brilliant. So anyway, so there's clarification coming on that. So I mean, that's brilliant, absolutely brilliant. And again,
Correct.
forgive me if this sounds like the exact same question, because it may do. But Seamus is saying, if you're self-employed and you pay yourself, is this something that you can claim? So I suppose there's lots of different ways that you can pay yourself as a self-employed person. But what's the deal there? Or is that the same as the last question?
Okay, as a self-employed person, you're not actually employing yourself because you can't employ yourself. You're running the business, so there isn't an employer-employee relationship. So if you're not employing yourself, you're not paying yourself emoluments, so you're not paying wages, so you can't claim a wage subsidy scheme.
Okay. Sorry about that, Seamus, but good.
It might be a situation that if you're, yeah.
Perfect.
Sorry,
Okay,
Greg,
and this came up on the slide, but again, Marielle Egan was asking, does the status of an employee affect the payment? Example, I have a number of students who earn €200 a week. So I know Karen had a lovely slide earlier on that looked at the various cutoff points, but maybe we can just address them where those cutoff points are.
Yeah. So
what affects the payment is. Go ahead, Karen.
Sorry, and I think there's a slight delay, but yeah, so the payments are there. It is the slide. So the payments are based where the employee's weekly gross pay amount. So if they fall between less than 101.50 per week, or it's more than 1462 per week, that gross weekly pay, there's no subsidy available. So where the gross weekly pay amount being paid to the employees in the normal payroll process, if it's from 151.50 to 202.99 per week, the employer will receive a subsidy of 151.50 per week in relation to that employee. Or where the gross weekly pay being paid to the employee is from 203 per week up to 1462 per week, the employer will receive a subsidy of 203 per week for that employee.
Okay, brilliant. And then, hello, Paula Travers. So this message is for you, Karen. So is it correct to say the end of year review will amend tax credits from the year 2022 onwards, not from the year 2021?
Yes, so when an end of year review takes place and there is a tax liability owing, it is normal revenue practice to collect that amount in manageable amounts for the employee. So if the employee finds there is a tax liability on the 2020 review, revenue will not reduce those tax credits until 2022 going forward.
Okay, brilliant. Now I presume this is probably it will, but it's Mystic Meg stuff as regards the pubs. But Camilla's asking, will this be available for I suppose the pubs when they finally do open? Will this scheme be available for them?
I can take that. I suppose it depends on whether they meet the eligibility criteria. You might have people who are very dry after the pubs have been closed and the turnover will not be down the requisite 30%. So they're not specifically excluded. It will just depend on whether they meet the eligibility or criteria of turnover and orders being down 30% for the full 6 months for the second half of 2020.
Super. Fantastic. Now, we just I wouldn't want you to think that we were ignoring you, Mert, but we did kind of address this question. But again, this was again regarding our proprietary directors, and at the moment, I think Anne's point was we're sadly just waiting on a little bit of clarification there. But just Mert Whelan, thank you very much for the question. Just so you know, we're not ignoring you. Guys, thank you so much. It's absolute minefield of information. And to be honest with you, I'll be watching the recording of Karen's presentation time and time again. Just to reiterate, it will be available on the Facebook page. And just to warn you that if you're watching it 4 weeks from now, as Anne says, things may have changed. Clarification on certain areas may have come. So just check back with the revenue.ie for details. As regards for you guys wanting to find out more, I mean, the best link to go for when it comes to the Employment Wages Subsidy Scheme is, I've just shortened it for you guys, it's bit.ly/revenue EWSS. So that will take you to the main revenue page explaining all the frequently asked questions where it comes to the scheme itself. So all it's really left to do is for me to say a huge thank you to Karen and Anne for sharing your words of wisdom and for sharing a very, very informative presentation. Thanks so much for joining us, guys. And I'm really excited because we've got Pat up next. So that's pretty exciting. So good stuff. Thank you so much. Appreciate it. So I need to find Pat now. There's Pat. I'm seeing Pat. Pat, can you hear us?
I can hear you.
How are you doing? I gave you a beautiful intro earlier on, but you weren't there to enjoy it. Saying magnificent man, gonna blow our socks off, explaining what debt warehousing is today. So I suppose quite obvious starting point, Pat, is number one, you're very welcome. Number two, what is debt warehousing?
Well, I suppose it was the way revenue moved to help businesses that were struggling with the COVID pandemic. And essentially what it does is it allows you, as it says on the tin, warehouse any debt that arose or that was due to be paid during the COVID pandemic period, and park it for a period of time, 0% interest, and then repay it at a very favourable interest rate. So that's it really in a nutshell. It's a way of freeing up liquidity for businesses, I suppose, that are really struggling at this point in time.
Cool. And who's eligible for it? Well,
I suppose, yeah, that's what I was going to try and cover is, well, who's eligible for it? Okay. What do you really have to do? And that's the main purpose of this discussion as such. I suppose it's worth saying at the outset as well that revenue moved quickly enough, so things like enforcement stopped. We stopped charging interest and late payments, and this was then the next measure along in terms of trying to help businesses that were trying to pick themselves up off the ground. So I have a few slides up there, and I'm going to try and talk people through them because, again, it's useful to have a picture in front of you to put some context on the information. Brilliant. So if you want to...
So there's your first wonderful slide. There you go. Look at the work that went into that. So take it away, Pat.
Okay, so if we could move on to the next slide there, Greg, I'll actually give you the sort of the golden rule around it.
Super.
So the essential golden rule around it is all VAT and Prem liabilities that fell due during the COVID period when your trading was restricted. You can warehouse all those. And then as a sort of a bonus or to help people get up and running, at an absolute minimum, you can warehouse the first 2 months after you return to trading. So you have your period where you had trading was under pressure, and you have your first 2 months when you recover as an absolute minimum. Now, there's a few peculiarities around this in the sense that businesses are returning to trading at different times based on the government roadmap. And also you have the issue around there's a variety of filing patterns people have. So for example, for filing your Prem, you file and pay monthly, you can actually pay quarterly, or you can pay on an annual basis. And when you're paying your VAT, you actually can pay it 2 monthly, which is the standard rate, 4 monthly, 6 monthly, or annual. So you can have a combination of those. So it's exactly figuring out what you can put in the warehouse is a combination of when you return to trading tied into your filing pattern. And I will show you one or two examples. They could get very confusing if we try to go through them all, but I will show you a couple of examples later on. So I suppose if we could move on to the next slide, which essentially is warehouse on one slide, and it explains the 3 key stages of warehousing. So if we just look at period 1, and this is the whole point of period 1, is to identify the debt that's actually in the warehouse. First important point there is that it's confined to VAT and Prem. And a really critical point is you have to file your returns. If you don't file your returns, you're not in the warehouse. And also we don't know how much is going to be in the warehouse. You asked me there at the outset who qualifies. Well, the good news, I would say, for the majority of businesses, and probably for the majority of businesses that are watching this, is all SMEs qualify automatically. So that's a really important point. The larger businesses do need to apply. And then I suppose this is the other tricky bit I was mentioning there earlier in terms of when does the warehouse period end. So it ends when you return to trading in line with the government roadmap, and you get as an absolute minimum the next 2 months on top of that. So if we take, for example, a business that returned in July, they returned in the middle of one of the 2 monthly VAT periods, they can warehouse that period, and they can also warehouse the following 2 months, which means they can actually warehouse all debt up to the 31st of October, notwithstanding they're up and running in July. So it's that sort of it gives you a nice bit of breathing space. So the important thing then is you have nailed down what is in period 1, the warehousable debt. So then we move on to period 2. So period 2 is essentially where the debt is parked at 0% interest for a further 12 months. So no interest is going to accrue on it. You can just leave it sitting there if you want to. And if we take our example of the business that returned in July, they're warehousing up to the 31st of October. Their 12 months begins on the 1st of November 2020 and runs until the 31st of October 2021. 0% interest, and the debt can be parked there. During period 2, businesses must file and pay current taxes. So even if you take the example of the customer that returns in July, in terms of that person's VAT, the first VAT return they will have to file is for November, December, which they will just have to pay in January. So it is a good bit of breathing space, and it means all the other debt is parked for a full 12 months. And then if we move on to period 3, so if we take the same example, that business now is looking at November 2021, and if they haven't paid any debt off in the meantime, now there's nothing to stop a business actually paying off debt in the meantime if they want to, so that means they've got it completely at 0%. But if they wait until then, they can qualify for a 3% reduced rate over the lifetime of that arrangement. So now what you're looking at is if you had 10,000 in there, you're going to pay it back at 3% over whatever number of years you agree to repay it. And we would be fairly flexible as regards the term. And the terms will be based on, I suppose, the actual individual circumstances of the business. So it's a fair degree of flexibility in there. I think the next slide I have that might be of interest to people is just a practical example. It's a make you up names before somebody comes back and says anything. So we have Murph's Pub and Grub and resumed trading in July 2020. And this customer now, just we're talking about the filing patterns, they pay their Prem monthly and they pay their VAT bi-monthly. That's called a standard filer. That's the basic regime around it. So because they resumed in July, August is the last month in their COVID period it's not the last month of their COVID period, it's the period they return to trading in, and they're entitled to the next full 2 months on top of that. So that brings them up to the end of October. So that locks down the amount of debt they can actually put into the warehouse. And just to clarify what that is, because they're a monthly filer, they can warehouse all the debts from February to October. The reason January is excluded is that because they were a monthly filer, they should have paid their January debt in February, which was before COVID kicked in from an Irish perspective. So it's all debts that fell due during the COVID period you can warehouse. In terms of VAT, you had your January, February VAT, but that would only have fallen due for payment in March. Therefore, you can warehouse that, and you can warehouse all first 5 returns of the year. So that's Murphy's Pub and Grub, and their period 2 will commence on the 1st of November 2020. Might show another, just a slightly different one. This is the DIY store. It would have been in a position to resume earlier in May 2020. What's different about this customer is they are a quarterly filer for Prem. In other words, they pay every 3 months, their Prem every 3 months, and they're what's called a triannual VAT. Sounds a little bit confusing, but basically they pay their VAT every 4 months. So if we go back, the critical thing all the time for any business to work out what their period 1 is, to look at when did you return to trading. So in this case, they returned to trading in May-June, in the May-June period. So they're entitled to warehouse that plus the next full 2 months. Worth bearing in mind, anybody that returned in the May-June period between, let's say, I think it was around the 18th of May or 17th of May that this category would have been able to resume under the government roadmap. Anytime between then and the 30th of June, anyone in that period, they got the next 2 months. So in the DIY stores case, because they resumed early in that 2 month period, they actually almost have 4 months of trading warehoused. So they're able to warehouse that, or that's the end of their period 1. Sorry, what they're able to warehouse now is a little bit better because they are in a 3 monthly cycle, and their 3 monthly cycle, if you add it, it's Jan, March, June, and then you have July, August, September. So they're able to actually pull September into the warehouse as well. So that's one of the benefits that falls sometimes to a quarterly filer or to a non-standard filer. They're also a non-standard filer for VAT, but it's 4 months and 4 months, and their 2 4-monthly returns fit neatly into their period 1. So that's what they've got in there. Hope that hasn't confused anybody too much, but I just wanted to give an example of a standard filer, which is quite easy to understand, and a simplified filer, we call it, because they have a slightly different filing mechanism. So you just need, bottom line is you just need to sit down and see, when did you return to trading? Have a look at your filing pattern, and you have a minimum of 2 months of basically of a bonus when you return to trading.
Brilliant. And you recommended it, you referenced a big document, a booklet that sits on your website, which gives you everything you need to know when it comes to debt warehousing. There's a shortened link at the bottom of the screen for you guys now. It's just bit.ly/debt warehousing, and that will take you to that particular booklet itself. So you can find out more. But that's exciting because I never even heard of debt warehousing. So that's exciting stuff.
I suppose just Greg, just to nail it down, I suppose the really important takeaway points is, as I was saying, the return to trading plus the 2 months. You must file your returns to get into the warehouse. So we need to know what's in there, and it's to your advantage. You need to file your returns. And the second thing is, during the 12 months warehouse period 2, you need to keep filing and paying to stay in the warehouse. So just really keep your current taxes up to date, keep filing, and then you're in a good position to get the 3% PPA.
Brilliant. And there was another initiative you mentioned as well when we were chatting. Talk us through that. So it was reduced interest rates, PPA.
Yeah, it's a phased payment arrangement. It is a reduced interest rate. So the normal interest rates for a repayment of tax generally vary between 8 and 10%. This is something that was released as a stimulus, part of the July stimulus measure as well. And the big difference with this is that it extends beyond VAT and Prem. So the warehousing arrangement is specific to VAT and Prem. This extends beyond for all taxes. So it's 3%. It's effective from the 1st of August. So it's not retrospective, but it applies from the 1st of August forward. So if you have some accrued debt in there at the moment, that is accrued. Where you gain is over the lifetime of the repayment. It's at the reduced rate of 3%, which is quite low by any standards. The trick is, and this is the interesting piece. It's timeline driven. So this facility is available up to the 30th of September. So you need to apply by the 30th of September. It applies to all non-warehouse debt. So obviously, if you've debt warehoused, you don't worry about this. That's a better arrangement. But if you have debt that you cannot warehouse, that it predates the warehouse period, or if you're a business that for some reason, or if you have a tax that doesn't qualify for warehousing, and you want to get an arrangement to pay it off, this is definitely the way to go. You apply online through our revenue online system, and without trying to steal a kind of a line from one of the ads, You know, it's when it's gone, but actually when it's gone, it's 10% as opposed to 3%, which is a big difference.
Yeah, so if it's something you're interested in, now is the time to investigate and apply. So talking about how do you apply for this? Talk about how do we apply for it?
So this is just a snapshot of how you apply. It's on the ROS, the revenue online system. So most people are doing business online, and certainly COVID has forced more and more people to go online, but it's all available through online. It's an online facility. A key piece again is your returns have to be filed. That gets you in the door. If you don't have your returns filed, it won't let you in the door. So important you have your returns filed. You decide or you suggest what you can do. So you specify a down payment. In the past, we were pre-COVID, we would have been stricter in terms of what a minimum down payment is. You know, we're quite flexible now. We understand the difficulties people are under. So you pick a down payment and you pick a number of repayments. So, for example, if you want to pay it back over 36 months or 48 months, you put in that, and the system will actually produce back to you what that is going to cost you per month over that period of time. So, and you have the facility then as well to actually go in and change the number of months, change the down payment, so you can actually see the effect, and you know upfront what you're committing to. In the past as well, we would have looked for quite a deal of supporting documentation. We're more flexible on this now, in the sense that, this is a more flexible long-term arrangement. We're trying to give people an opportunity to kind of deal with debt that's hanging around there, and we will look for information on an individual basis based on the circumstances of the case. I think might pop up a slide, I think, as well, in terms of maybe hard to see there, but this is purely indicative. It's an indication of what a business might save if they have debt out there at the moment, what they might save over the lifetime of the arrangement, looking at it for a variety of amounts from €10,000 up to €70,000, and showing it 36 months, 48 months, 60 months. That they're just indicative numbers across the board. So it's just to give people a feel of where the savings are. It's also worth pointing out that there's a lot of flexibility in the online system. Apart from applying and being able to figure out what you want to commit to, or what the implications are in terms of what you're committing to, there's also a facility to defer for a month. If you need a break for some reason, something happens, I can't make my payment this month, you can defer for a month, and you can do that on a number of occasions. On top of that, there is a facility for basically a payment break. Somebody, your circumstances change dramatically, and you say, look, I'm going to be in difficulty for a period of time. And at the moment, those payment breaks are available for up to 12 months. So we're trying to cater for the various situations businesses will find themselves in coming out of the COVID period.
Brilliant. And there's some big savings there. So and this sounds like a very stupid question, Pat, but just remind us again, what exactly, what's the name of this scheme? So if I wanted to jump on revenue and just investigate it further, the exact name of this scheme is what?
It's a phased payment arrangement. Phased payment arrangements have always been available through revenue. What this is, it's the same phased payment arrangement facility, except the terms have been softened considerably and the interest rate has been reduced. So anybody that has, once you go onto the revenue website, on the landing page, you will see phased payment, and you click on that and it will bring you down that route. So it is a self-service facility that you can do online. The critical piece of information, or the critical must do, is to have your returns filed.
Okay, absolutely. And we often do that when we think we're trying to avail of a scheme, we stop communicating with revenue, stop putting in our returns, even if we're not paying, which is bonkers. We always need to submit our returns regardless. No, that's brilliant. You had a final slide there, Pat.
A final slide, just by way of a summary. You qualify for tax clearance. Now, this is a really important point, and I know it was touched on earlier in the discussion by Anne and Karen. You need tax clearance for lots of things. You need it for the EWSS. You need it for the new spend or stay and spend scheme. But you need it for lots of other things. So you won't get tax clearance if you have tax arrears. However, if you have tax arrears and you enter a phased payment arrangement, you are deemed to be compliant. So that's a really important point to make. So come in for a phased payment arrangement, a mechanism to handle your debt, and you will qualify for tax clearance, and that's covered in the second point. I've covered the last point. or the third point. I'm just re-emphasizing it. The flexibility around the down payment, the repayment terms, and then the other point is all the flexibility in terms of the deferral and the payment breaks. So it's at your fingertips. You can do it online. You don't have to go anywhere, call into an office. So you can go online and you can see what it means to you yourself. And it is also covered in that information booklet. And I know you have the link. You mentioned it earlier. So perfect. It's all covered in there. So there's detail on both schemes and a good number of frequently asked questions as well.
Superb. Absolutely brilliant. Now, there was a quick question in, and it's time to bring Michael in from the local enterprise office in Longford. But before we do, there was a quick question I spotted. I'm sorry if I'm missing anyone's questions here, but Paula was asking: Is there any facility to include income tax or corporation tax in the debt warehouse scheme?
In the debt warehouse scheme, no. The warehouse scheme is confined to VAT and Prem.
Grant, that's perfect.
But the PPA is definitely available for that debt.
Exactly. Okay. So
the 3% reduced one.
Brilliant.
Once the debt is due, it can go into a phased payment arrangement.
Oh, that's good news there. I thought it was all bad news there, but that's good news. Superb stuff. Brilliant stuff, Pat. I really, really appreciate you. Stay around. There may be a question or two at the very, very end, okay. But I think now's the time to bring in Michael. Jumping at the bit he is to talk about some local enterprise office supports. So a big hello, Michael. How are you? How's Longford?
It's good, Greg. Yeah, I think we've got the graveyard shift here. Yeah,
you do, but still 44 plus people listening to every word you say now, including some Hollywood scouts. So you're all good.
I won't keep you too long. I suppose first on behalf of the Leo Network, just to thank Anne and Karen and Pat for contributing to the lunchtime seminar and bringing us the information on the various schemes. And the different Leo offices have a very good relationship with the revenue offices around the country. And they're very responsive to queries raised. I suppose just in the general to say that, we continue to roll out the full range of services across the country. We've engaged, since the start of the pandemic, we've engaged with thousands of small businesses, many of them for the first time. And the support and guidance that we've given to those businesses has been very well received. What we would do is we would encourage all small business owners to engage with the Leo offices in their county. Every county is a Leo office. If you're not on the mailing list with your local Leo office, most of them produce a weekly newsletter which gives you information on the various schemes. Please contact the office and make sure you get on the mailing list to just keep you up to date on what's happening. And if there's any aspect of business that people are worried about, or any kind of scheme that they think they want to know more information about, they should contact their local enterprise office, and hopefully you'll get the professional support and advice that you need. I suppose the two quickly, I know we're very limited in time, but two little schemes that we'd like to talk about maybe that aren't directly related to ourselves, but are top priorities maybe for small businesses. One is the Restart Plus grant, which was launched, the second phase of that was launched last week. It's been run by the local authorities through the rates and finance department. And it's a vital cash injection for small businesses looking to restart. We would encourage businesses to apply for that as quickly as possible. It's open up to the end of September, but phase one was the deadline was culled, the closing date. So not trying to frighten people, but you're as well to apply for that if you intend to restart and you qualify in that your turnover was down 25% between April and June this year, or you're closed, then please apply for that immediately. And the link for that is on most of the local authority websites. And the other one is just a scheme that might be relevant to the self-employed. There's a couple of queries there during the presentation related to self-employed people. As part of the July stimulus package, there was an extra 12,500 places announced for the business enterprise support grant. And that grant was originally designed for people on the back to work enterprise allowance. But the details are a little bit sketchy, but we understand that self-employed people who are coming off the PUP, the pandemic unemployment payment, will fall eligible for a grant support of up to €2,500. And that's available through the Department of Social Protection. And again, if you're looking for more information on that, you can contact the officers in your local enterprise office, and they'll hopefully help guide you through it. Just in general, and very briefly to finish off, we're still running our mentoring supports. We have a full bank of professional mentors there to deal with any aspect of business that you need covered. If you're looking for professional advice and guidance, if you're looking for somebody giving you an objective look at what you're doing, then we would encourage you to contact your local enterprise office and avail of the mentoring support. Our training supports will be a little bit quiet during August because businesses are on holiday, but a lot of them have transferred now onto the online platforms, and they're being delivered in a more flexible and I suppose accessible way for a lot of small business owners who would find themselves busy. It's very useful to be able to dip in and out of training programs now on a kind of an hourly or 2 hourly basis at some stage during the day. It can be day or evening. And we're still, the likes of the Trade and Online Voucher Scheme is still being rolled out. We can get up to €2,500 support for developing an e-platform, an e-commerce website, or enhancing a website so that it has e-commerce capabilities. And obviously our grant, we have small grants there to support business startups, expanding businesses, or indeed businesses that might need an injection in terms of sustainability. I think we've scope now to look at those in terms of considering them eligible for what we call Measure 1 financial injection. So they're just a quick summary of the type of supports that we continue to roll out. The big thing is to get in touch with us, as you put up on the screen there. Get in touch with your local enterprise office, and you'll find a very flexible and agile and responsive response to your needs, and kind of helping you assess where you are and how you might move forward. So I hope that's succinct, Greg, and gets you to the end of your presentation.
Yeah, it's brilliant. It's brilliant. But the simple reality, I can't stress this enough week in, week out, is, if you've got questions and you need support, your first stop is to reach out to your local enterprise office. I'm not quite sure regarding the Employment Wage Subsidy Scheme, the Restart Grant Plus. A great starting point is to reach out and have a chat with your local enterprise office. For me, as someone that's brutal when it comes to finances, one thing that the local enterprise office can find me a mentor that's good at finances, and that's absolutely instrumental for running my business. So the simple thing is the support is there from the local enterprise office. Don't be afraid to reach out and have a conversation with your local enterprise office. If you call and don't get through, drop an email, someone will respond to you. And weirdly enough, Michael just referenced one of the newer supports out there through the local authority, which is the Restart Grant Plus. And just to announce that next week, on next week's show, big drum roll, we're going to talk about the Restart Grant Plus and everything that's involved with it. So put that in your diary for next week at 1 p.m. And if you wanted to whet your appetite a little bit, here's about 40 seconds to whet your appetite regarding the Restart Grant Plus.
The Restart Grant is being expanded with an extra €300 million to help businesses get up and running again. The maximum grant available is now €25,000, with the minimum increase to €4,000. The grant can be used to help your business to protect your staff and customers, or to assist with other COVID-19 related costs. If you are one of the thousands of businesses who have already received assistance, you can reapply for further help. Let's get going again. Apply now through your local authority.
So that's what we have for you for next week. So that's next week's fun and games on Lunch and Learn. So find out about the Restart Grant Plus. Just very quickly, just to bring in and say a huge thank you to my guests. Karen's had to dash off, but a big thank you to Karen for a superb presentation earlier on. I want to say a huge thanks to Anne for being with us today. Who said the revenue were scary people? They're lovely people. And the wonderful Pat O'Shea. And the wonderful Pat O'Shea, who's demystified what this word debt warehousing means. And even come across another initiative I hadn't even heard of. So, guys, thank you so much for joining us today. And last but not least, coming in at the end and just being a fountain of knowledge as ever, the brilliant Michael Nevin from the local enterprise office, who's probably getting a phone call saying, why is he late for that important meeting now?
That's my Hollywood agent. No, Greg.
Or the Hollywood agent, that's what it is. But a huge thank you, Michael, for coming in today and talking about the local enterprise office supports. So that's it. So from me, Greg Fright, thanks a million, guests. We'll see you all next week and we'll talk about the Restart Grant Plus. So have a productive week, busy week. And if you have any business questions, reach out to your local enterprise office. So for me, goodbye.
Your local enterprise office, helping your business respond.
That's it.